Thinking about investing in real estate, answer these questions to determine if commercial or residential is right for you. Residential real estate and commercial real estate are two sides of the same coin. They represent very similar goals, but there are nuances between the two. So let's start with residential. This is obviously easier to start. There's a ton of content and videos about how to get started. You can get started with no money down, very little down, and everybody needs a place to live. So it's very natural to start with residential. This can be house hacking, this can be duplex, any type of rental situation where you're a landlord, that is considered residential investing. On the other hand, buying a dedicated house for rental purposes is limited in how much you can scale based on that one property. You know, there are always inherent risks with vacancy when you have single property and single tenants covering a single mortgage. And so a lot of your investment in residential is concentrated into one particular property. So the question for you is, commercial is a diversified risk. Are you okay with more of a specific risk, or do you want to diversify your risk based on tenants and tenant occupancy? Commercial real estate generally requires higher financial commitment. Is that something that you're able to commit $200,000 to? Because in addition to the higher purchase price, you're going to need additional cash reserves. For example, the water heater on a single family rental, that may cost you $1,000 for replacement and installation. If the water heater goes out on a commercial building, you're probably looking at a bill of at least $5,000 or $6,000. Therefore, your reserves need to be higher as well as the initial capital. However, on a building that has multi-units, you can have turnover and you can have some vacancy without affecting your ability to pay the bills. Now let's talk about the returns. Your returns on a single family property are generally limited to one of two things: income and appreciation. A large part of the projected return from buying investment property is the expected appreciation of the property. For example, we're here in Texas and we've seen tremendous appreciation on a variety of our properties. Head south a little bit to Austin, these properties have seen 200 or 300% increases in just a few short years. A lot of investors like to speculate and gain on the appreciation nature of single family rentals. On the other hand, commercial real estate does not have that same type of appreciation. The value of a commercial real estate property is really driven off of the income. So there's a better opportunity on the commercial side to increase occupancy and then to raise rents and increase the net operating income for the entire property, thus generating a higher valuation of the property. Again, there are two different ways to make money through real estate investing, and it's up to you to decide, are you preferring the rental appreciation and higher net income, or more of a passive and market appreciation from the surrounding areas? Let's talk about a team. Are you a person that prefers to handle everything in-house? Maybe you work another job and your time is limited, so therefore you're responsible for locating the property. You're responsible for finding tenants. You're responsible for comparing loan and other financial documents. If that's the case, then a single family rental may be a better fit where you're able to bring all of these tasks in-house. You can do them on your own time, and also the risk is a little bit lower. However, with a commercial property, you need to hire a team of experts. You're dealing with a completely different subset of rules, of laws, of taxes, and it really is important to hire a professional team that is able to guide you through this set of different parameters. Finally, let's talk about risk. I can see arguments on both sides if you're risk averse or risk loving. If you're risk averse, I may recommend investing into a portfolio of single family rentals versus sinking all of your capital into a single commercial building. And there are arguments pro and con against this, but I do think that while it is more work to manage a portfolio of disparate locations, the liquidity of single family rentals cannot be understated. If there is any type of economic recession and a decrease in occupancy, those single family rentals have a lot more value and can be traded on the market faster than a single commercial property. So that wraps up residential real estate versus commercial real estate. If you're interested in contacting us, please reach out for a free consultation.